Top story, the markets are rising this morning after 3 tumultuous trading days. The Dow is up more than 700 points, while the S&P and NASDAQ futures have added more than 1% in value. It comes after another volatile trading session yesterday tied to President Trump's tariffs. But the president says he's not backing off his trade wars. And when asked if the overall tariffs are permanent or open to negotiation, a point that his advisors struggled to clarify last week, the president insisted that they can both be true.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. There'll be fair deals. There can be permanent tariffs, and there can also be negotiations, because there are things that we need beyond tariffs. We need open borders. So we're going to get fair deals and good deals with every country, and if we don't, we're going to have nothing to do with them. They're not going to be allowed to participate in the United States. And I will say this, virtually every country wants to negotiate. If I didn't do what I did over the last couple of weeks, you wouldn't have anybody wants to negotiate. We would have gone to these countries who want to talk, and they were, well, we don't want to talk. Now they're coming to us.
Well, the tariff battle with China is escalating to a whole new level this morning in a social media post issued yesterday. President Trump threatened an additional 50% tariff on China if the communist nation did not withdraw its 34% retaliatory tariff on U.S. goods by today. In response, China said it would, quote, fight to the end and take additional countermeasures against the United States. The world's second largest economy hinted that more retaliatory tariffs against the U.S. could be coming. At the same time, the European Commission has proposed counter tariffs on 25% on a range of U.S. goods in response to President Trump's tariffs on steel and aluminum. That's according to a document seen by Reuters, which revealed the tariffs on some goods would take effect on May 16th and others later in the year.
You know, Willie, first of all, the Wall Street Journal editorial page, 3 important editorials today by the board. First, how tariff damage spreads, auto edition. It goes into how this is already causing problems, especially for Detroit and Michigan. And then a follow-up on the Senate passing a resolution. The Journal says the country needs a tax cut, and soon, they say, as a counterbalance for the tariffs. And then at the bottom, which we'll be reading later, the case of mistaken migrant expulsion, where they end up telling the Trump administration, you made a mistake. Like, this is, you can't do this. This is, as Judge Wilkinson said, this is a recipe for, quote, total lawlessness. The Supreme Court seemed to agree yesterday in a decision we'll get to in a little bit, where all 9 justices said these migrants deserve due process. All 9 justices saying that. Getting back, though, to this, a lot of concerns, not only in Michigan, but across America about the impact. And you saw also yesterday several times the markets just sort of capitulate wildly. The president puts out the Truth Social post saying that he's going to go after China. The markets react negatively to that. I think there's a tweet that gets it wrong on social media saying that he's going to go off that, the market goes back up. It also responded somewhat positively during a press conference with Benjamin Netanyahu when the president suggested he was open to talking to China and other countries. I think I have that right. And so, again, the markets are looking for any reason to believe that this president's willing to talk to other countries and strike a deal. But China, obviously, going to be much harder.
Yeah, and it's really a moment-to-moment thing. The minute the markets stabilize, the president says, we're going to throw another 50% tariffs on China, and the markets go down. So they're not sure how to read this president. And we have heard, as you guys were talking about a little bit yesterday, and again happened yesterday evening, which was supporters of Donald Trump in the business world, Wall Street guys, Ken Langone, the co-founder of Home Depot, saying, what is going on here? Who's advising this guy? Expressing shock that Donald Trump, who has loved tariffs for most of his adult life, if not all of it, is now actually implementing them. You had Jamie
How are they
Dimon.
Shocked, Willie?
I don't know.
How are they shocked?
By the way, these are the guys who've known him forever. You know, Howard Lutnick and those guys brag about hanging out with him in the 80s socially and getting to know him really well. And they're expressing, not Lutnick, but others, expressing shock that Donald Trump is now using tariffs as a cudgel to negotiate with other countries. It's pretty wild. And Jamie Dimon, obviously one of the most prominent voices on Wall Street, came out in his briefing, his newsletter yesterday, saying prices are going to go up. This is bad. So it's pretty objective when you look at the analysis on Wall Street. But as you said, the markets, at least for now, and the futures are up a little. Let's bring in this anchor of CNBC's World Exchange, Frank Holland. Frank, I'm looking down here. Looks like the Dow futures up pretty significantly, about 1.5 points so far. What are you looking at?
Yeah, futures up significantly across the board. So the big question on Wall Street today, is this a turnaround Tuesday or what some people on Wall Street call a dead cat bounce, a very brief recovery that ends quickly before more losses? Gave you something to talk about at a cocktail party. So really, just too soon to tell. With so many variables, including, as you already mentioned, the escalation of the trade war with China, the president threatening tariffs over 100%, also EU leaders pushing back on the Trump tariffs, and also sentiment just continues to be kind of mixed at best. I think that's the positive way to talk about it. I want to go back to the action yesterday. Really a wild day of action yesterday. The Dow swinging 2,600 points from its highs to its lows. We also saw the S&P 500, often called the broader market, moving from down 4.5% to up almost 3.5%, also losing 3 days in a row. So the move's actually coming from reports that the White House was considering a pause in tariffs, and then later the administration pushing back on that, the president really emphasizing he's committed to that tariff strategy. Some interesting notes in the markets yesterday. So the SPY ETF that tracks the S&P 500, very popular investment vehicle. It saw its busiest day of trading ever in its entire history, $127 billion traded. Also, retail traders, they bought about $1.5 billion in net stock buying. So the SPY is really dominated by mega cap tech. A lot of those names in the so-called Mag 7, a lot of them likely got a boost from that ETF buying. A number of them up considerably yesterday. Amazon up, Alphabet up as well. One stock, however, that was not up yesterday, is higher up today, is Apple. It really seems to capture the full concern of tariffs. Apple's actually coming off its worst 3-day stretch since all the way back in 2001. It's lost about $640 billion in market cap. To put that in perspective, that $640 billion it lost over 3 days, that's bigger than the market cap of about 90% of the companies in the S&P 500. So huge losses there. A lot of concerns about their supply chain. Some reports today that Apple's considering moving more of its iPhone production over to India. So really emblematic of a lot of companies trying to figure out what to do next when it comes to this trade war.
All right, CNBC's Frank Holland, thank you so much. And it's so interesting. I hear Frank talking about Apple continuing to get pounded, and they really are. And I just got to say, go back and look at what Warren Buffett has done over the past year. He dumped his Apple stock. There's a way he's dumping his Apple stock. He's gone mainly to cash. People are saying, why is he going mainly to cash? Well, for the same reason he got out of the markets before the .com bust. And everybody was saying, oh, the old man, this is what, 99? He's lost it. We all got 15, 20%. He got 3 or 4%. He had to write a letter to his shareholders saying, I would have done better this past year just watching movies, staying in a movie theater, sort of apologizing. Then, of course, the .com bust came, and it was Warren Buffett who was right. The same thing happened in 2008. And the same thing, Mick, of course, has happened this time, where Warren Buffett's been sitting on the sidelines knowing that volatility was coming, and especially with Apple. I mean, this has been very predictable. And these titans of Wall Street that seemed shocked and stunned and deeply saddened that Donald Trump's doing exactly what he said he was going to do since 1987, you got to scratch your head and ask where they've been.